Good evening. This is the video newsletter for Buy Sell Short for Thursday, May 10th. More of the same assness in this what has become an absolutely, excuse my French, shit market. This market blows. There's no other way to put it. This is one of the crappiest markets I think I've traded in the last 14 years. Just absolutely awful. You're scared to really hold anything. I mean, this market of late has turned us into piranha feeding on each other, just looking for 1 or 2 cents. If you get a 2-cent gain, you're going kaboom. Absolutely sad. Nice little gap this morning. Economic news, not really warranting the gap we had, but given we were down 6 days in a row, it's understandable that they were going to gap us back up. We sort of meandered back and forth within a 70-point range, and then going into the last hour, they pulled the rug out. Interestingly enough, after hours, financials are down pretty decently. JP Morgan down 5%. They announced an surprise conference call today. S&P downgraded the residential unit. They're saying they're going to have significant losses in one of their synthetic portfolio garbage nonsense, the same sort of crap that helped lead to the 2008 crash. These guys feeding from the Fed tit are going to continue to be over leveraged, and JP Morgan, it seems their little gambles did not pay off. They were writing all these crazy CDO things that no one actually understands, and they lost money in it. They were projecting to have a profit in it. I believe they're saying now $800 million loss. Q1 was very bad for them. They're expecting $4 billion in lawsuit fees, and the stock is down 5%. You've got the other financials, Goldman Sachs, Citigroup, et cetera, getting hit in after hours. So, a lot of things may change between now and tomorrow, but looks like this is the kind of news that could break the back on the support we are seeing in the market. We're looking at the Dow 15-minute chart. We did a nice consolidation over the last couple of days down here in the 12,800 level. As you can see, we've got a resistance line. And like I said in the video on Tuesday, we really only care about starting to swing plays if and when the market gets above that 13,050 resistance. We're not even close to that yet. As I said, what will probably drive it up there might be news of Greece forming a government or something else. Now, you do have a lot of pundits coming out and say, we're down 3% this week. Considering the avalanche of bad news that we've had from Europe this week, 3% is not that bad a drop. And I tend to agree with that. If we look at the daily chart, what possibly could be forming, if we're able to hold these support levels, is a rectangle trading range, sort of similar to what we're seeing in the Russell. We've actually been seeing that over the last couple of months. Support 12,700. Resistance 13,300. 600-point trading range, 600-point range. We had similar action this time last year. This may be what we're looking forward to over the summer. And if that's the case, and we do see another bounce back up here over the next few days, and then another retrace, you'll start to see traders become comfortable with the fact that we're in a trading range, and we might start to see some decent trades. Right now, there is squat out there. I could call trades for 2 cents gains, but for every one of those, there's one you lose 3. It's like a 2 steps forward, 1 step back market. Not very conducive, especially for a lot of traders that buying a stock and then selling it for a loss if it doesn't work out. A lot of you guys won't do that, so it's a reason for sitting on hands right now. Russell chart, you can see, in a normal market, as I've said, this kind of action, rectangle formation, this kind of support, I would be going out right now and picking up charts and picking up stocks that I like for the bounce that probably will come. This is not a normal market, has not been a normal market, and even over the last couple of days, some of the paper trades, stocks I've been watching that I've said, you know what, I'm going to buy ABC here. Then the little man on my shoulder says, you know what, just sit back. Let's watch a couple of these. Let's see a few of these run without us. Let's prove that we're actually finding some plays, they're running, before we actually put our money to work. Funny enough, some of those plays that I've actually done that on, continue to drop. That says it all. We've been through a lot of markets like this over the last decade, and typically what I look for is I've got a large watch list. I'm actually drained. This is the fewest number of trades I've personally done, I think, in a couple of years. And, markets like this do appear. I'm watching a lot of stocks, but they're not triggering. And what I usually look for in a market like this is I've got a watch list of stocks. I've got some stocks I really want to buy, but I want to see them run. I want to miss a few plays. I want to see plays that I was going to buy, but that I hesitated on. I want to see them spiking 10%, 20%. I want to see a few of those start to do that. That has not been evident yet, and that is why I continue to have us sit on our hands. And, a market like this, I know it's hard to say this, but your goal in a market like this is to not lose money. Your goal is to stay in the game, and that is what we're doing right now. I know some of you guys don't like doing that, and you may end up canceling and leaving. I perfectly, I understand that. But having been through many, 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 many markets like this, this is the right course of action for us right now. Now, I will say that if there is a stock that you like and really like and you want to buy it, do it. Just price in the downside. Price in adding lower. If you buy a stock and you're not okay seeing that stock 5% lower, don't buy it. Or if you're okay seeing it 5% lower and in your mind you say, I can add that if it goes lower, then you may consider buying it. Another rule of thumb I like to use in a market like this, I prefer to stay high, mega high, almost all cash. I'll trade 1 million stocks intraday if there's action, but going home overnight, the max number of plays in a market like this that I would be looking to even take home would be 2 or 3, and that would be on the high end. 2, 3 stocks, that's it. For a lot of you guys, no stocks may be the best thing. This is not a swing market for us right now. Now, if we see the market bounce back up in the range, if we see the Russell do that, if we see the Dow do that, then we can possibly look to see some of these stocks ranging. But stocks are just making multi-month lows and have yet to find support. At least many of them have yet to find support. Let's check out the SMH. We had that breakdown, the shorts come in, and of course they've been frustrated. Now, we made it back up to the breakdown point. What would be bad for this now is if we see a reversal again tomorrow. And then that 200-day moving average would be a calling. I mean, the SMH, not too far above its 200-day moving average. Russell, not that far above its 200-day moving average. Dow, we got, 600-point downside to our 200-day moving average. Another 3-4% there. So, and this line that I notated a few days ago, how volume was continuing to drop off, you'll see over the last week, volume has started to slowly build, and increasing volume on a sell-off, not really what we want to see right now. Even the Facebook plays are not seeing a whole lot of momentum at one of the biggest, most anticipated IPO in years, only a few days away, and the peers are sucking balls right now. The volume is low on them, and it's just random as heck. You could go to Vegas and bet on the roulette wheel looking at a lot of these stocks. I mean, we could have 5 stocks with the exact same chart, with no news, and one of them will randomly pop, and the other ones will drop. And that's just the kind of market it is. And that is not a market I want to risk my money in. Simple as that. That may change next week. Until it does, be highly, highly cautious. I mean, we may, this has actually been a pretty long malaise. I mean, we're going on month 2 now, this. If I look back at my notes, 3 months is about the time frame for a crappy market. So perhaps we may see that summer swoon that we've come so used to seeing actually not happen. It might have just pushed forward a little bit early this year. Fingers crossed that is the case. And remember, don't trade just because you have to trade. The trades out there are crap. 2 steps forward, 1 step back. Risk reward is just not there. Handset, the trades will come. These crappy periods always end. It's just a matter of waiting it out. That's it for the video. I will be out of the office the next 2 days, so if you've got any questions, shoot me an email. I'll try to answer it. Otherwise, I will see you guys in the chat room on Tuesday. Stay safe, stay high cash, Don't be gambling too much in this market. And that's it. Good night.